Good morning, everyone, and welcome to today's webinar, Motor Vehicle Taxes and Your Organization's Responsibilities. My name is Melissa Sines. I will be your moderator for today's webinar.
Hi, everybody. Thanks, Melissa. Appreciate everybody taking the time to join us today for our webinar. We're going to be talking about motor vehicle taxes and your organization's responsibilities. And just wanted to mention, everyone, that this presentation today is just a general guide. It's not a comprehensive resource. So be sure to send us your questions, follow up with us after if you have questions that we're not able to get to today, and we'll be more than happy to help you out. So let's get going. Before we dig into specific types of transactions that can involve motor vehicles, I thought it'd be a good idea to touch just real briefly on a few key concepts. And the first one, of course, is what is a motor vehicle sale? Now, most of us, when we think of sales, we're thinking of some sort of transaction where we get some sort of good or service and they get some sort of money or other consideration. But in Texas, when we're selling or buying a motor vehicle, a sale can include any transfer of a motor vehicle for no consideration. So when we give a vehicle away for free, we're still going to end up owing tax. There is a gift tax in Texas, and there are some transactions that can qualify, and we'll talk about that here in a little bit too. Today, when we're talking about consideration paid for a motor vehicle, what we're talking about is the amount that's going to be paid for the motor vehicle and any accessories attached to it before it's sold. And there's several things that are included in that consideration. We have to include the cost of the vehicle, any material, labor, service, interest, loss, or other expenses, any accessories or attachments that are fixed at the time of the sale, any transportation cost prior to the sale, and we also impose taxes on the chain of distribution before the sale. For example, importer excise taxes assessed by the United States. These are all part of the total consideration that we pay. Consideration itself just means anything that we use as a payment for a motor vehicle. Some of the big examples are things like cash, if we assume a lien or a debt, if we give property, or if we give services or perform some sort of labor. Next, let's take a look real quick about what we mean when we say motor vehicle. Some things that look and act quite like a motor vehicle aren't taxed as motor vehicles, so I thought it'd be a good idea to touch on this just real briefly. Now, of course, some of the obvious ones, cars, trucks, truck cabs and chassis, buses and vans, all of these meet the definition for motor vehicle. Motorcycles, autocycles, and mopeds are included. Also included in the definition of motor vehicles are trailers, semi-trailers, and trailer kits. It also includes dollies, Jeeps, Stingers, aux axles and converter gears, motorhomes, travel trailers, and park models. Now, not everything out there that looks and behaves similar to a motor vehicle is taxed like a motor vehicle. For example, a bicycle or a skateboard is not going to be considered a motor vehicle for tax purposes. Anything that's moved only by human power. Any device used on rails, so steam engines, rail cars, road building machinery, and towable mobile offices. Kind of grouped all in the same category are these items that we're looking at now. Nothing that we're seeing here is considered a motor vehicle. Together, you'll often hear these types of vehicles referred to as salvage. What we're talking about are vehicles that have been issued a salvage title from the Texas Department of Motor Vehicles, or that have been certified by DMV as abandoned or non-repairable. Also in the grouping are any vehicles that have been declared a total loss by an insurance company. And with these items that we've looked at that are not motor vehicles, what ends up happening is instead of being taxed as a motor vehicle, they're taxed as tangible personal property, and you end up paying regular, or what we sometimes call limited sales and use tax. This is the tax that most of us are used to paying on most consumer goods when we go to the store and buy items, and there's a state 6.25% and a local 2% too. We're going to talk about motor vehicle taxes and tax rates though here in just a second. Next, let's take a look at some of the taxes that are imposed by the tax code, their rates, and when they're due. And keep in mind that we're talking about the taxes imposed by Tax Code Chapter 152, taxes on sale, rental, and use of motor vehicles. Taking a look at the top of the list, the first one we see there is sales tax. This is due anytime there's a sale or a retail sale of a motor vehicle in Texas, and the rate is 6.25% of the sales price or the total consideration that you pay for the vehicle. In situations where you buy a motor vehicle from a dealership, a licensed Texas motor vehicle dealer, they'll simply collect 6.25% tax on the sales price. However, if you buy a motor vehicle from a private party, and a private party is just anyone who is not a motor vehicle dealer, and so this captures a lot of our business-to-business sales. What the tax code tells us is that we're going to owe tax on the greater of the total consideration paid or the sales price and 80% of the vehicle's standard presumptive value, also called SPV. SPV is set by the Texas Department of Motor Vehicles. And again, this comes into play when we're talking about private party sales, and we have to do that comparison, and tax is due on the greater of those two values, either the sales price or 80% of that SPV. Moving on down the list, the next tax we see there is the Texas Emissions Reduction Plan Surcharge, also called TERP. This is going to be due when we have a sale, retail sale, or use of typically larger, heavier motor vehicles that are used for inter or intrastate commerce. The tax rate is variable. For older vehicles, it's a 2.5%. For newer models, it's a 1% tax rate, and this can be imposed in addition to another motor vehicle tax, just so you're aware. Moving on down the list, we have use taxes. It's 6.25%, and this is imposed anytime we bring a motor vehicle into Texas for use here that we didn't already pay Texas tax on. So, for example, if I go out of Texas and I buy a motor vehicle and I bring it here for use, I'm going to owe 6.25% motor vehicle use tax. Another time that this can kick in is if I buy a motor vehicle in Texas, but I claim exemption for using it outside of Texas, so I don't pay any tax. I leave Texas with the vehicle, and then sometime later I come back to Texas to use it here again. Once you come back, we're going to see use tax be due, still going to be 6.25% though. Another tax that's available under Chapter 152 is called new resident tax. This is a $90 tax that is available for anyone who comes into the state with a motor vehicle and is a new resident. And this can apply to businesses and any type of legal entity too. We're going to talk about what a new resident is here in just a little bit, but I wanted to give you a note here. If you happen to be bringing an antique motor vehicle into Texas, you'll be paying the lesser of the $90 new resident tax or use tax at 6.25%. In order to qualify, the vehicle has to be at least 25 years old. It needs to be a collector's item, and you have to use it exclusively for exhibitions, club activities, and parades, and it's not allowed to carry any type of advertising. And again, we'll talk a little bit more about what a new resident here is in just a moment. The next tax here is even exchange tax. Even exchange tax is available $5 per vehicle involved. As long as all we're doing is exchanging motor vehicles for motor vehicles and there's no other tax and no other consideration paid for any of them, then we call that an even exchange. And each vehicle involved will be imposed a $5 even exchange tax. Finally on the list, we see gift tax. Gift tax is a $10 tax, and it's available when we give a motor vehicle away for free to someone who can qualify. Typically, that's going to be next of kin. Nonprofit organizations can give and receive motor vehicles so long as they're a 501c3 organization. They can give and receive vehicles, and either way, we're going to have the $10 gift tax due. Most other transactions that don't involve consideration don't qualify as a gift, so many of our business-to-business transactions aren't going to qualify, but there are some situations where it can kick in, and so we'll take a look at those here in just a moment too. Let's talk a minute about legal entities and individuals. Kind of in its most basic, a legal entity is sometimes called a legal person. This is an entity or an organization of some kind that has its own rights and responsibilities separate from its owners. Legal entities can own property, they can engage in business, and they can be held liable for its debts as a legal entity separate and apart from its owners. On the other hand, an individual, sometimes called a natural person, well, that's you or me. That's just a human being. Taking a look at a few examples of legal entities, and keep in mind, everyone, this is not an exhaustive list, but some of the more common ones are things like corporations, limited liability companies, all kinds of partnerships, including general partnerships or partnerships that have some sort of registration, associations, societies, trusts, nonprofit organizations, and other folks too. Now, an individual that operates a business is sometimes or often called a sole proprietorship. A sole proprietor may or may not be doing business under an assumed name, also called a DBA or doing business as name, or a trade name. When this happens, it doesn't mean that the business is separate and apart from the sole proprietor that operates it. It just means that that sole proprietor is doing business under a different name than what they themselves have. Legal entities can have this happen too. So for example, I could be a corporation and I can file for what our Texas Secretary of State calls an assumed name, and then my corporation can operate under that assumed name. However, I haven't created a new company. So I would think of DBAs, trade names, and assumed names as nicknames for either a sole proprietor or a legal entity. We're not going to spend a whole lot of time today talking about exemptions, but I did want you guys to know that there are several exemptions for motor vehicle taxes available. You see them up here on your screen today. If you think you may qualify for a particular exemption, I would recommend going to comptroller.texas.gov, which is the homepage of our website. From there, you can search for publication 96-254, which is the Motor Vehicle Tax Guidebook, and it has an entire section dedicated to exemptions available for motor vehicle taxes, how you qualify, and how to claim them. And of course, if you have questions about any particular exemption, please let us know. Let us know through the webinar today or follow up with us afterwards, and we'll be more than happy to get back to you. While we're talking about exemptions, there is one thing that I want to mention that sometimes come up, which is called occasional sales exemptions. Under a different tax code chapter, under tax code chapter 151, which is where we get our regular sales tax that we're used to paying on most other consumer goods, there's what's called an occasional sale exemption. And it applies to tangible personal property when we buy a business or a segment of a business. There is no such exemption for motor vehicles. So if you acquire a segment of a business or you buy a business, just be aware that since there is no occasional sale exemption, we'll need to have a 130U title application prepared for each of those vehicles, and we'll need to look at the value to assess tax on. All right, now that we've got some basic background information done, some foundational information, let's go ahead and take a look at some common taxable transactions that happen in business-to-business or organization settings. And then we'll also take a look at some common non-taxable transactions. And as we work through the next few slides, I encourage you to kind of pay attention for themes. And we'll point them out as we go along. But this can help you down the road when you're dealing with your own motor vehicle transaction to help figure out if it's going to be considered a taxable sale or use or not. So keep in mind with the next few slides, motor vehicle tax applies when a vehicle transaction involves a legal entity, unless there's an exemption available. And some of the examples that we have are when we transfer a motor vehicle between an entity and a stockholder, or when we transfer a vehicle from a subsidiary entity to some other related or unrelated subsidiary entity. Transferring motor vehicles from an existing entity to any other existing entity. And when we transfer a motor vehicle upon dissolution or termination for consideration. So kind of taking a look at this slide, we can see that we have the first three examples here don't mention anything at all about consideration. It simply says that we're transferring the vehicle from one of these entities to somebody else. And we call these taxable, again, calling back to the very beginning of the presentation. Because of the way the word sale is defined in the tax code, these top three are considered sales. The last one, notice that this is happening, but there's consideration being paid. So that is going to be the themes that we want to look at here. Are we paying consideration? Are we not paying consideration? And when is this transaction happening? Or is any other context or information going on that might be useful? Also considered taxable transactions are things like incorporating a partnership or a sole proprietor and transferring a motor vehicle into that new business for consideration. When we transfer a motor vehicle from an existing entity to a newly formed subsidiary entity for consideration. When we form or organize a partnership and one of the partners transfers a motor vehicle to that partnership for consideration. And transferring a motor vehicle to an existing partnership. Notice again here, we have a couple items here that mention consideration, and then we have one that does not mention any consideration. And again, the reason that this is important is because whether or not consideration is paid, there's still a sale going on, but obviously there could be some situations where we won't see a sale going on, and whether or not consideration is paid could come into play with that. Let's take a minute here and look at these next ones kind of one at a time. Partnerships can get a little complicated. Just be aware that a partnership is a legal entity for tax purposes. And so when we have a partnership that transfers a vehicle on dissolution or termination of the partnership and there's consideration paid, we're going to see tax being due. Now, thinking about the themes that we identified on the last couple slides, we can probably already see here that if we're not paying consideration, we may not see this as a taxable situation. A change in a partnership. So if we transfer a motor vehicle into an existing partnership. So for example, let's say I have a partner and we're operating a general partnership and we get together and we decide to bring in a third partner. And that third partner transfers a motor vehicle to the partnership. Then we're going to see tax due on that because we're going to see that be a sale. If a partner leaves the partnership, but the partnership still exists, and we transfer a motor vehicle to one of the individuals, then we're going to see a taxable situation there too. And then finally, if we incorporate a sole proprietorship or a general partnership and transfer a motor vehicle into the business for consideration, then we're also going to see tax due. All right, I promised everybody that we'd get back to legal entities as new residents. So let's talk about that here briefly. When a legal entity that originally formed outside Texas comes here for the first time to establish residency or to start doing business, we're going to say that you're a new resident. In order to qualify for new resident tax, your entity has to have owned the vehicle and brought it into Texas at the same time that you became a new resident, and it needs to have been registered in your entity's legal name in another, or assumed name or DBA in another state or country. As long as we can hit these two provisions, and when we come in, we're going to end up paying that $90 new resident tax. Okay, so now let's take a look at some of our non-taxable transactions, and I bet most of you can already figure out what the non-taxable transactions are going to be here. So the first non-taxable transaction we'll take a look at are conversions. So when we convert our legal entity to some other form of business, we don't see that as a sale. So for example, if I have a limited liability company today and I file for conversion to a corporation, any motor vehicles that I have are not going to have tax due on them because of that conversion. Another situation where we don't see tax due is when we incorporate a partnership or a sole proprietorship and we transfer a motor vehicle into the new business for no consideration. So this would be a situation where I'm a sole proprietor, I'm a partnership, I decide to become a limited liability company or corporation or some sort of legal entity, and I don't pay any consideration for the vehicle, I'm not going to see any tax due. And of course, if you recall with our taxable slides, this same situation was taxable when there was consideration paid, because then we're going to see that as a sale. Another one is when we're closing up shop and we're transferring motor vehicles from our dissolving or terminating entity. We're not going to see any tax due when it's done as part of a stockholder's share dissolving or a distribution of assets. There's not going to be any tax due in that situation. Name changes are another one where we don't see a sale happening. Again, all we're doing is changing either a legal name or maybe, as we called it earlier, a nickname, an assumed name, DBA, or trade name. So there's no tax due when a corporation or some other type of legal entity changes its legal name, or if they switch their title and registration from their legal name to one of their assumed names. Same thing for sole proprietorships. If they have their sole proprietor name on there now and they need to title it into their DBA name, that's fine. We're not going to see any tax due. And then on the flip side, say that the vehicles are currently in the DBA name, but they want them to be back in the sole proprietor's name. We're not going to see any tax due for that too. And of course, this can apply to partnerships and any type of legal entity that has an assumed name, trade name, or DBA. Mergers are another example of non-taxable situations. Anytime we have one or more companies merge and we end up having just one surviving entity, there's not going to be any tax due for motor vehicles that need to be retitled in that surviving entity's name. We're also not going to see any tax due when we incorporate a general partnership and transfer that motor vehicle for no consideration. And we touched on this a moment ago when we mentioned that the same thing can apply for sole proprietors that incorporate. And again, this is a newly formed partnership in this case, we're not paying any consideration for the vehicle, so we're not going to see any tax due. And again, when we incorporate that sole proprietorship and transfer that motor vehicle and don't pay any consideration, no taxes due then either. So in the last several slides, we kind of learned that if I am a brand new business or a recently formed business and I'm not paying any consideration for motor vehicles that are being transferred into that business's name, or if I'm terminating a business and I'm not paying any consideration for motor vehicles that are transferred out of the dissolving or terminating business, I'm not going to have any tax due. However, if I'm working with existing companies or existing legal entities or organizations, then I'm going to end up owing motor vehicle tax whether or not I paid consideration for it or not. There are some credits available in Texas, tax credits, and we also have situations where you may end up needing to file for a refund. And if you're ever late with a tax payment, then there are penalties that can kick in. We're not going to touch a lot on penalties today, so I just want to mention to everyone that our due date is 30 days from buying the vehicle or first using it here in Texas. And after that is when you'll start to see penalties assessed. For credits, we do allow credit against Texas use tax when you buy a vehicle outside of our state and pay sales tax to that other state or local taxing authority. We're not able to give you credit for sales tax paid to another country, for property taxes that you might pay, or for any federal import, export, or excise taxes. Sometimes situations can arise where you pay the wrong tax or you pay too much tax and you need to ask for a refund. If you buy the motor vehicle from a licensed motor vehicle dealer, reach out to your dealer and work with them for any refund that may be due. If you bought the vehicle in a private party transaction and you had to go down to the county tax office, be aware that county tax offices cannot issue motor vehicle tax refunds once they've finalized your application. So if that happens, you can then come directly to us here at the comptroller's office and file a refund claim with us. The form that you'll want to get from our website, again, comptroller.texas.gov, is form 14-202, which is our claim form for refunds of motor vehicle tax. the TERP surcharges. And if you have any questions on those, definitely reach out. Also bear in mind that when you file for a refund claim, we're going to need to know what you're basing your claim on, the date that the tax was paid, and any supporting documentation that you have, like for example, a county tax receipt or something similar, maybe a bill of sale, letting us know why there's a refund due. All right, so we're nearing the end here, and I wanted to take a minute to kind of give you guys a few resources that we use to build this presentation and that I recommend you take a look at if you're new to motor vehicle taxes or if you have questions that come up down the road. The first one, of course, is the tax code. Texas Tax Code Chapter 152 is where we get imposition for all of these taxes for motor vehicles. Another great resource is that I've mentioned before is publication 96-254, our motor vehicle tax guidebook. This is a topical guidebook that covers a lot of ground, a lot of information. And of course, if you have questions on either, let us know. Now, for those of you that might like to dig deeper, or you might be curious to know what the comptroller's policy about a particular situation may be, or maybe you're just a policy wonk and you really like doing the research, these are the Texas Administrative Code rules that we use to build today's presentation. Keep in mind, of course, there are additional rules that you'll find when you go to the Administrative Code. And to access either our publications or our statutes or our comptroller rules, when you go to our homepage, comptroller.texas.gov, you'll want to navigate to our motor vehicle sales and use tax page. You can either do that using the All Taxes link near the top, or you can simply do a search for motor vehicle sales tax. To the right-hand side of our motor vehicle sales and use tax page, you'll find links to publications, laws, which is where you'll find the statute, and rules, which is where you'll find these Texas Administrative Code rules. I know that we've been getting questions today from the webinar, and I thank you guys for sending all those in. If you have follow-up questions today after, or if you have any questions on motor vehicle taxes or any other tax that we administer, we're here to help you out. For your motor vehicle tax questions, you can reach out to our taxpayer services section. They're at 1-800-252-1382. And they're available Monday through Friday from 8 a.m. to 5 p.m. You can also email us at tax.help@cpa.texas.gov. And I recommend emailing if you have a less urgent situation or a more complicated question. And then for those that like to get some help in person, we do have field offices located throughout the state that you're welcome to go into. On our homepage at the very bottom, you'll find the Contact Us link. And on the Contact Us page, you'll be able to find all of our office hours and locations for all of our field offices throughout the state. You'll also find frequently used phone numbers. So if you didn't jot down the number for taxpayer services, go to that Contact Us page on the website and you'll be able to pull it up there. And that's all we have for the presentation today. I'm now going to turn it over to Melissa, and we are going to field a few questions for you today. And please don't forget, for in-depth questions, you can write us or you can call us.
All right, thank you, Rob. And thank you to our attendees. Throughout the presentation, I see some of y'all have already sent in questions, but I want to make sure to give everyone a chance to ask a question today. At this time, please take 5 minutes to type in your questions in the questions pane, and after 5 minutes, we will review some frequently asked questions with Rob. All right, time is up. Thank you everyone for submitting your questions today. Let's go ahead and start reviewing. The first question, Rob, that we received is, I need to transfer the title of my car that is in my business name to my daughter who is starting college. I already paid tax when I bought the car. My daughter isn't paying me anything for the car. Does this qualify for the $10 gift tax?
Thanks, Melissa. That's a really good question here. So it sounds like you run a business and you've got a vehicle in your business name that you want to give to your daughter, and she's not going to be paying anything for it. So to determine whether or not this is going to qualify for gift tax, there's a little bit of additional information that we need to know. Primarily, we need to know, when you say that it's in your business name, are you a sole proprietorship or are you some form of legal entity? Now, if you're a legal entity, we know that transactions between legal entities qualify for as sales, even if there's no consideration paid. And a legal entity, unless it happens to be a 501c3 nonprofit organization, is not eligible to give a vehicle away and have it qualify for gift tax. So if you operate a legal entity and that vehicle's in that business name, then this is going to be considered a sale, and your daughter is going to end up paying what we mentioned earlier, the greater tax on the greater of 80% of the standard presumptive value for the vehicle. And in this situation, since you're not charging anything for the vehicle, that's what she's going to pay the tax on, since it's going to be higher than zero. Now, on the other hand, if you're a sole proprietorship, we talked early on about how sole proprietorships are indistinguishable from their trade names, DBAs, or assumed names, their nicknames. So if you are a sole proprietor, then since you're giving the vehicle to your daughter, that would qualify for the $10 gift tax. Thank you for that question. I really appreciate it. Melissa, what do we have next?
All right. The next question we received: my company is forming a new related entity. We want to transfer some vehicles from my existing company to this new company. We already paid taxes when we first purchased the motor vehicles. What are the tax consequences related to this transfer to our new company?
Thank you. That's a great question. So it sounds like you've got an existing company and you've recently formed a new one, and we're wondering if this transfer to the new company is going to be taxable. And as we learned, it's going to depend on a couple of things. So we know that your companies are related. Related is a fairly broad term. So more specifically, what I'm curious about is if your new company is a subsidiary of your existing company. And if that's the case, how long ago did you form that new subsidiary company? And are you charging any consideration to the parent when you transfer that motor vehicle? So if we unpack this a little bit, what we'll see is that if you have a new entity that has been formed as a subsidiary and you're not paying any consideration for the vehicle, then we're not going to see any tax due. Now, if it's a new formed subsidiary and there is consideration, we will see motor vehicle tax due. And if that entity is not a newly formed subsidiary, if it's been around for a while, then whether or not we pay consideration, we're still going to see tax due. And don't forget that since this would be considered a private party sale, we're going to have to look at that comparison of the sales price versus 80% of the SPV to calculate the actual tax due. But it's a really good question and a very common one, so I appreciate you sending it to us today. Melissa, I think we have time for one more question.
All right, Rob. So the last question is: my LLC recently bought the entire operating assets of another company, including several motor vehicles. Is this transaction exempt as an occasional sale?
That's a fantastic question. I'm glad that we got it here today. We talked early on about occasional sales exemptions being available under a different chapter of the tax code, chapter 151, where we get tax on our consumer goods called tangible personal property and a few services too. But we don't have the same treatment under the motor vehicle tax code, chapter 152. Now, I think that there's still a little bit of information that we could potentially unpack here. We know that you bought a company and the operating assets of that company, and there were some motor vehicles. We know that we don't have an occasional sale exemption. We also don't know if we have consideration paid for the vehicles or not. But if we unpack this a little bit, we know that the occasional sale exemption is not available. So for each of these transfers, we are going to call them sales, and we are going to see motor vehicle tax due. And again, we're going to look at that comparison between the sales price and the SPV. Another thing to note in this is, since there is no exemption for those motor vehicles, you'll need to prepare a Form 130U title application. Since it's a private party transaction, it might be good to know that you don't need to worry about the seller signing the 130U, but we do have tax due in this situation. And if y'all have questions about the occasional sales exemption that is available under Chapter 152, definitely give us a call. If you're curious about the tax treatment for motor vehicles, write in or give us a call. We'll be happy to help you navigate all of that. So I appreciate everyone for letting me come today and present. I've had a really good time. I'm gonna go ahead and turn it back over to Melissa now, and I hope everybody has a great day. Thank you so much.
Thank you, Rob, and thank you everyone for participating in today's webinar. If you have other questions, please submit them to tax.help@cpa.texas.gov or call 800-252-1382 to speak with a tax specialist. Y'all have a great day.